Hi students, good morning. I am Dr. Najin Jasballa, Assistant Professor. In this class, we are going to learn about dependent branches, Unit 2, Block 1. Let's start the introduction of dependent branches. A branch which is dependent upon head office, mainly for goods and cash. Books of accounts relating to such branch also will be maintained by head office. Then we can see the meaning of dependent branch. A branch is said to be dependent when its accounting is done at the head office. That is, the branch income, branch expenses, branch assets, and the branch liabilities are ascertained by the head office only. Then we can see the features of dependent branches. The first feature is the branch receives goods from head office. Only those goods supplied by the head office will be dealt by the branch. The next feature is goods may be supplied to head office at cost price or invoice price. Then cashiers and the collections from debtors are periodically remitted to the head office. Then the branch expenses like salaries, rent, rates, and taxes are paid and they will made by the head office only. The next feature is the head office separately sends cash to the branch for meeting their day-to-day expenses. Then we can see the methods for charging goods to branches. What are the methods they are charging for their goods to their branches at a cost price, at a selling price? In case of retail branches, they are following the wholesale price, then arbitrage price. Okay, selling price method is adopted where the goods would be sold at a fixed price by the branch. It is suitable for dealers in tea, petrol, ghee, etc. In this way, greater control can be exercised over the working of a branch in as much as that the branch balance in the head office books would always be composed of the value of unsold stock at the branch and a remittance or goods in transit. The arbitrary price method is usually adopted if the selling price is not known or when it is not considered desirable to disclose to the branch manager the profit made by the branch. Then we can see the accounting for dependent branches. Dependent branch does not maintain a complete record of its transactions. The head office may maintain accounts to dependent branches in any of the following methods. We can see what are the methods they are following for maintaining accounts. When goods are invoiced at cost, if the goods are invoiced to the branch at cost, the trading result of branch can be ascertained by following any of the three methods. What are the methods are there? Debtors method, stock and debtors method, wholesale branch method, and final accounts method. First, we can see what you mean by debtors method. This method of accounting is suitable for small-sized branches. Under this method, separate branch account is maintained for each branch to compute profit or loss made by each branch. The opening balance of stock, debtors, petty cash are debited to the branch account. The cost of goods sent to branch as well as expenses of the branch paid by the head office, that is the salaries, rent, insurance, etc. are also debited to it. Then conversely, the amounts remitted by the branch and the cost of goods returned by the branch are credited. At the end of the year, the value of unsold stock, the total of customers' balances, outstanding, and that of petty cash are brought into the branch account and on the credit side, and then the branch account will reveal the profit or loss. Debit balance will be the loss suffered by the working of the branch and vice versa. If the branch is allowed to make small purchases of goods locally as well as to incur expenses out of its cash receipt, it will be necessary for the branch to supply to the head office a copy of the cash account showing details of cash collections and disbursement. I have given the format of branch account. Books of the head office in the branch account, particulars column and the amount column. In the debit side, in the same manner, we have to write particulars column and the amount column in the credit side also. What are the items will appear in the debit side? Two opening stock, two debtors, to petty cash, to furniture, to prepaid expenses. These are the item only the opening balances. Okay, so then goods sent to branch, then cash sent to branch for branch expenses, for any other purposes, then closing creditors, closing outstanding expenses. These are the items will appear in the debit side of the branch account in the books of the head office. Then we can see what are the item will appear in the credit side of the branch account in the books of head office. You come to this credit side by opening creditors, by opening outstanding expenses, by cash received from branch. In case the cash is or collection from debtors, then goods returned by branch. Any other goods are there returned from the branch. Now we have to write it in the credit side. Okay. Then closing stock, closing debtors, closing petty cash, closing furnitures, any other closing prepaid expenses. Now we have to write it in the credit side of the branch account in the books of head office. Then, in case the credit side total is higher than the debit side total, now that is the profit. We have to transfer that profit to the profit and loss account. In case the debit side total is higher than the credit side total, now that is the loss of the organization. Even if it is profit or loss, whatever it is, we should transfer that amount in the profit and loss account. Okay. Then we can move for the sum part. Illustration 1. Buckingham Brothers, Bombay have a branch at Nagpur. They send goods at a cost to their branch at Nagpur. However, direct purchases are also made by the branch for which payments are made at head office. All the daily collections are transferred from the branch to the head office. From the following, prepare Nagpur branch account in the books of head office by debtors method. In the debtors method only we are going to prepare the sum. Okay. So next I just wanted to read out all the question. Listen carefully. Particulars amount as well as the particulars amount, the debit side as well as the credit side, right? You come to this debit side to opening stock, opening balances on 2011. First we can see the interest cash. Interest cash, how much they have given? 2000. Then sundry debtors 25,000. Then stock transferred from head office 24,000. Then direct purchases 16,000. Cash sales 45,000, credit sales 1,30,000, direct purchases 45,000. Then returns from customers. Customers return the goods 3,000. Then goods sent to branch. Okay, from head office 60,000. Then transfer from head office for petty cash expenses 4,000. Then you come to the credit side. Bad debts 1,000, discount to customers 2,000, remitted to head office, received by head office, how much? 1,65,000. Then remittance to head office, not received by head office. How much is the amount? 5,000, right? So then branch expenses directly paid by head office, 30,000. Then closing balances on 31/12/2009. How much? Stock. Direct purchase 10,000, transfer from head office 15,000. Debtors we don't know. Interest cash we don't know. Then petty cash expenses 4,000 are there. Okay. So based on this debtors method, we are going to prepare the sum. Okay. So here solution I have given in the books of Buckingham Bros, Bombay, Nagpur branch. Okay. Head office in Bombay and the branch is located at Nagpur. Okay. And just you put 2 columns in the debit side as well as 2 columns in the credit side. Okay. In the debit side, you should write the particulars column, then amount column. The credit side also, you should write particulars column and amount column. Then we can move for the items opening branch. Okay, opening branch assets. What are the items are there? We have to write it. Stock they have given, right? How much is the stock? See the question. Stock is there. Stock transferred from head office 24,000. Direct purchase 16,000. You can write here stock 24,000 plus 16,000. 40,000. Okay, you should write here from head office and a direct purchase. Okay, then you come to this next debtors. Debtors how much? 25,000, right? So then you can write here debtors 25,000. You can write debtors 25,000. Then impressed cash. Impressed cash how much? 2,000. See here. See the question. Interest cash 2,000, right? So you can write here 2,000 interest cash. Then two goods and two branch. Goods and two branch how much? 60,000. Okay, 60,000 is the goods and two branch. Then creditors, direct purchase. Direct purchase creditors how much? See here. Creditors, direct purchase 45,000, right? So we can write here creditors, direct purchase 45,000. Okay. Then bank, sundry expenses, how much? 30,000 only. Okay. Then petty cash expenses, they have given the question 4,000. Okay. These are the items will appear in the debit side. Okay. Then you come to this credit side. Bank remittance received from branch. You can see bank remittance received from branch. Okay, 1,65,000. 1,65,000. From debtors, 45,000. Okay, then cash sales. See here. One lakh 20,000 plus 45,000, right? So we can write here 1,65,000 plus stock 5,000 are there. Okay, you can write the stock also. Then transfer from head office. Transfer from head office. How much? 15,000 are there. Okay, you can write here transfer from head office. Then direct purchases. Okay, direct purchases 10,000. Then sundry debtors. For the sundry debtors calculation, I have given here. See, total remittance 1,25,000, right? So here, total remittance. This is collection from debtors. See here, total remittance 1,65,000 plus 5,000. Okay, total 1,70,000. Then cash sales is how much? 45,000. They have given in the question. See here, 45,000, right? So that amount we have to subtract it. Subtract it. Total collection from debtors 1,25,000. Then calculation of sundry debtors, closing balance we should find out, right? Because we should write the closing balance here. That's what we should do this calculation. Opening balance how much? 25,000. So given the question. Then credit sales how much? 1,30,000. That also given the question. Just to total it 1,55,000, right? So then the items we have to subtract the returns, discount, bad debts, collection. Everything we should subtract. When we are subtracting, we will get the closing balance of sundry debtors. Okay. Opening balance 25,000, credit sales 1,30,000. Just to add both items, you will get 1,55,000. Here, return 3,000, discount 2,000, bad debts 1,000. Then collections. Collection we have calculated here. Here is the amount 1,25,000, right? So that amount also we should subtract it, 1,31,000. When you are subtracting it, you will get the closing balance. How much is the closing debtors? 24,000. So that amount we should write here by Sunday debtors. Okay. Next, you come to this calculation of closing balance of interest cash. Closing balance of interest cash also we have to find. How much is the opening balance of interest cash? 2,000, right? Here they have given. See here, interest cash. Opening balance 2,000, right? 2,000 here. Okay, so you have to write it 2,000. Then transfer from head office. We should add the amount which is transferred from head office, 4,000 R. Just to add it, opening balance as well as transfer from head office. How much is the total? 6,000 R. Then expenses. We have made the expenses 4,000, right? Just to subtract the expense. Subtract the expense. 6,000 minus 4,000. 2,000 is the closing interest cash. Okay, so you can write here by interest cash. Okay, 2,000. Just to total it. When you are totaling this credit side, you will get 2,21,000. 2,21,000. After this amount, just to subtract these are the items. Okay, when you are subtracting these are the items, you will get the difference amount 15,000. 15 amount is the profit of the organization. Okay, so we have to transfer that profit to the general profit and loss. Okay, this net profit we should transfer to the general profit and loss. Okay, I hope you have understood. Okay, so next we'll move for the next exercise and the next method, stock and debtors method. Now we can see the stock and debtors method. First, I just to give the introduction about this stock and debtors method. If it is desired to exercise a more detailed control over the working of a branch, the accounts of the branch are maintained under the stock and debtors method. According to this method, the following accounts are maintained by the head office. You can see account purpose. Account also I give you. The purpose also I mentioned here. First, we can see the accounts. Branch stock account or branch trading account. Ascertainment of shortage or surplus. Then branch profit and loss account. That is calculation of net profit or loss. Then branch debtors account. That is ascertainment of closing balance of debtors. Okay. Then branch expenses account. Ascertainment of total expenses incurred. Then goods sent to branch account. That is ascertainment of cost of goods sent to branch. Okay. Then if the branch is also allowed to purchase goods locally and to incur expenses out of its cash collections, it would be necessary to maintain a branch cash account and an independent record of branches. The manner in which entries are recorded in the above method is shown below. Transaction I have given, account debited given, account credited given. First we can see the transaction. Simultaneously we can see the account debited as well as the account credited. Okay. So first one is cost of goods sent to the branch. It is branch stock account. In the account credited, goods sent to branch account. The second one is remittances for expenses. It is the branch cash account in the account debited. Head office cash account is the account credited. Next, any assets, that is furniture provided by the head office. Account debited asset, that is the, if it is the furniture, now we have to write it. But in the case of account credited, cash account of creditors, okay, then cost of goods returned by the branch. In the accounts debited, goods sent to branch. Accounts credited branch stock, then cash is at the branch. In the account debited column, branch cash, but in the case of account credited, branch stock. Okay, then credit sales at the branch. In the account debited, branch debtors, account credited, branch stock. Okay. Then return of goods by debtors. Here branch stock, but in case of account credited, branch debtors of. Okay. Then return of goods by debtors to the branch. In this account debitory column, branch stock, account creditor column, branch debtors account. Then cash paid by debtors. In case of account debited, branch cash. In the case of account credited, branch debtors account. Then discount and allowances to debtors, bad debts. Account debited, branch expenses account, account credited, branch debtors. Then we can see the remittances to account debited, head office, that is means cash account, but account credited, branch cash. Okay, then expenses paid by HOD, okay, head office of the organization. Branch expenses account, here head office cash. Then we can see closing stock. Credit the branch stock account with the value of closing stock at cost. It will be carried down as opening balance for the next accounting period. The balance of the branch stock account. If in credit will present the gross profit on sales and price after adjusting the value of the goods. Okay. So other step also I have given here. See the step one by one. Transfer balance of branch stock account to the branch of profit and loss account. Then transfer balance of branch expenses account. Debit of branch profit. Okay. Then the branch in the branch profit and loss account will be transferred to the profit and loss account. The credit balance in the goods and the branch account is afterwards transferred to the head office purchase account of revenue account. It being the value of goods transferred to the branches. Then we can see the wholesale branch method. Under this system, the goods are invoiced at the wholesale price at a retail branch. Opening stock and closing stock of branch will be shown at the wholesale price, and unrealized profits in closing stock will be debited as stock reserve to profit and loss account of profit office. For the purpose, it is assumed that the manufacturer will always be able to sell the goods on wholesale terms and thereby realizes the profits equal to the difference between the wholesale price and the cost price. Okay, so the value of the opening stock at the branches and the price of goods and during the year the wholesale prices. This is the branch stock account or the trading account is debited with. Okay, so in this price of goods and during the year the wholesale price is credited by the sales effected at the shop and the closing stock of goods valued at the wholesale price. We can see the illustration too. First, I just wanted to read the question. Mrs. Rahul operates a number of retail outlets to which goods are invoiced at the wholesale price, which is cost plus 25%. These outlets sell the goods at the retail price, which is wholesale price plus 20%. Following is the formulation recording one of the outlets for the year and 2000 particular CML. Stock at the outlet 1,30,000. Goods invoiced to the outlet during the 3,24,000. Gross profit made in the outlet 60,000. Good lost by 5,000. Expenses of the outlet for the year 20,000. Stock at the outlet 31,000. You are required to prepare the following accounts in the books of for the year ended 31/2012. A outlet stock account, then outlet profit and loss account, then stock reserve. First, we can see the outlet stock account. Okay, we'll move for the outlet stock account. Okay, here, just you put two columns in the debit side and the two columns in the credit side. Two columns in the debit side as well as two columns in the credit side. Then in the debit side we have to write it to balance BD. To balance BD. How much is the balance? 30,000 are there, right? So we can write here to balance BD 30,000. Then goods sent to outlet. How much amount they send to their outlet? 3,24,000, right? So you can write here 3,24,000. Then you come to this credit side. You come to this credit side. First sales, right? By sales. For that sales amount, I have given the working notes for calculation of sales. Wholesale price. Okay. 100 plus 25. That is, they have given in the question. See the question. Wholesale price, which is cost plus 25%. These outlets sell the goods at the retail price, which is wholesale price plus 20%. Okay. See here. For the workings. Wholesale price. If the wholesale price is 100 now, you should add 25% margin. Okay, that is 100 plus 25, that is 125. Then retail price, they have clearly given in the question. If it is wholesale price, they should add 25%. If it is retail price, we should add 125 plus 20%. Okay, 125 plus 20%. 125 plus 20%. That is 150. Okay, 150. Then gross profit at the outlet. How much is the gross profit of the outlet? Wholesale price minus retail price. How much is the wholesale price? Wholesale price minus retail price. 150 minus 125 is equal to 25. Now we can calculate the retail sales value. We should calculate the retail sales value. 60,000 are there, right? Here they have given 60,000. Okay. Gross profit made by the outlet 60,000. 60,000 into 150 divided by 25. 60,000 divided into 150 divided by 25. You will get 3,60,000. 3,60,000. Right here by sales 3,60,000. Okay. Gross profit they have given in the question. So directly we can write the gross profit. See here. Gross profit 60,000, right? So you can write to gross profit. To gross profit CD 60,000. Then sales also we have calculated 3,60,000. Then how much is the closing balance? Closing balance is 36,000. Stock at the outlet 31/3/2012 36,000. So you can write here by balance CV 36,000. Just to total it, the debit side total is 4,14,000. 4,14,000. Credit side total is less than the debit side total. So that is the goods lost by fire. That is the loss of the organization. 18,000. Goods lost by fire. Okay, 18,000. So you can write here by goods lost by fire 18,000. Then we can find out outlet profit and the loss account. Outlet profit and loss account. by gross profit BD. For this outlet profit and loss account, you put two columns in the debit side as well as two columns in the credit side. Okay, particulars column, then the amount column. The credit side also you should put particulars column as well as the amount column. You know gross profit, right? How much is the gross profit? 60,000. Okay, so you can write by gross profit BD. By gross profit BD. Before that also we learned by gross profit BD 60,000. Then the expenses which was given in the question, right? 20,000 are the expenses of the outlet for the year. How much? 20,000. Can write here 20,000. Okay, 20,000. Then goods lost by fire, we have find out, right? Goods lost by fire, 18,000. We can write here goods lost by fire, 18,000. So how much is the profit? To total it, the credit side total 60,000. When you're subtracting the expenses, you will get 22,000. Profit is 22,000. Then they should calculate the stock reserve account. Okay, stock reserve account. Stock reserve account. You should put two columns in the debit side. Two columns in the debit side. Two columns in the debit side. And two columns in the credit side. Particulars column, amount column. Particulars column, amount. Okay, so here to head office profit and loss account transfer to head office profit and loss account transfer. How much to head office profit and loss account transfer? 6,000, right? 6,000. We have to do the workings for that amount. Okay, stock reserve, opening stock 30,000, opening stock 30,000 into 25 by 125. Okay, 30,000 into 25 by 125. That is 6,000. We can write here stock reserve account to head office profit and loss account transfer 6,000. Then by balance BD, by balance BD 6,000. Then we have to calculate the closing stock. 36,000 are there. 36,000 into 25 divided by 125. You will get 7,200. Okay, you will get 7,200. By head office profit and loss account, can write here 7,200. Put the total. 13,200 is the total. The total. Then you find out the balance. To balance JD stock reserve 7,200. Stock reserve 7,200. Okay. So then we move for the final accounts method. We'll move for the final accounts method. We'll move for the final accounts method. In this method, trading and profit and loss accounts are prepared considering each branch as a separate entity. The main advantage of this method is that it is easy to prepare and understand. It also gives complete information of all transactions which are ignored in the other methods. It should be noted that branch trading and profit and loss account is merely a memorandum account, and therefore the entries made therein do not have double entry effect. We can see the third solution. I just wanted to read the question. The Bombay traders invoiced goods to its Delhi branch At the cost, head office paid all the branch expenses from its bank account, except petty cash expenses which were met by the branch. All the cash collected by the branch was banked on the same day to the credit of the head office. The following is a summary of the transactions entered into at the branch during the year ended December 31st, 2011. Next, particulars, the amount in the debit side and the particulars, the amount in the credit side. Debit side, the opening balances, stock 7,000, debtors 12,600, petty cash 200, goods sent from head office 26,000, goods returned to head office 1,000, cash sales 17,500, credit sales 28,400, allowances to customers 200, discount to customers 1,400. Okay, then you come to this credit side, bad debts 600, done by customer 500, sundry 800, cash 2500, stock 6,500, cash under the branch account and loss account, under the expense account, adopting the method and trading account to the result as disclosed by branch account and for solution for debit right you follow the access for the credit you follow the calculation for the amount in the basic also calculus count in the amount of you should have balance right because another provide and what the balance of value so 4,600 cash right to stock 7,000 to debtors 12,600 to petty cash 200. How much is the total amount? 19,800. Just to write the total in the outer column. Then you come to the next part. December 31st. Goods into branch. Goods into branch. Goods into branch. 26,000. So you can write here. Goods into branch for 26,000 on December 31st. Then we have to see what are the expenses are there. What are the expenses are there? Salaries, rent, rates, salary expenses. Okay. So like here, salaries and wages 6,200, rent and rates 1,200, then sundry expenses 800. Like the total then balance being profit carried to head office profit and loss account. How much is under this calculation? How much is the balance profit carried over to the issue? Credit side. Water item, cash received from debtors. Cash is how much? 17,500, 8,500. The total of 6. Okay. Goods of 1,000. Okay. Then we can write what the items are there. Stock, stock 500, stock 500, debtors 10,800, petty cash. Just you in the inner column and add this amount and write the outer column. How much is the total? 16,400. Just you put the total, add it 63,400. For this credit side total is 63,400. But the debit side total is the balance amount. Okay, the balance of the organization. Transfer to the profit and loss account, right? 9,400. Balance is just you stock 7,000. This is the stock and deposit, right? So you can here stock 7,000. Books and batch. Books and batch. Stock 7,000. Batch 6. 0 by 10. Just to subtract the 500, put the total, and then put the output column 5,000. How much is not there? Return of like here, put send to branch. Then how much? Return how much? 1,000. Here is the value. So you can write here return 1,000. Then by balance CD, closing stock, right? Closing stock is 6,500. Here is the closing stock. Here is the closing stock. Now to write it 6,500. Okay, just you total it. The debit side total 52,900. Debit side total 52,900. You just subtract the stock and it's into branch. You will get the profit 19,900. To branch profit and loss account 19,900. Okay, here the stock is there 6,500. That stock we will brought down for the next year 2012 January 1st. To balance BD, 6,500. Okay, then you can see. Then we can see that Delhi branch debtors account. Delhi branch debtors account. Date, particulars, and the amount column. We put 3 columns. Date, particulars, and the amount column. The credit side also you should write date, particulars, and the amount column. Okay. January 1st to balance PD. How much amount? PD. Bad debts, how much? Added 600. Okay. How much is the bad debts? Bad debts 600. Then closing debtors 9,800. Then right here closing debtors 9,800. Just to total it 41,000. Total both sides 41,000. Okay. Just to carry forward this amount, this closing balance for the next year. January 1st, 2012, to balance BD. To balance BD, how much? 9,800, right? So you can write here 9,800. Okay, 9,800. Next, Delhi branch expenses account. You should prepare the Delhi branch expenses account. You put date column, particulars column, amount column. The credit side also you put date column, particulars column, and the amount column. Okay, you can write it. We just write it. December 31st. What are the expenses are there? Salaries and wages. See here, salaries and wages. How much? 6,200. Then rents and rates. Okay, what are the expenses are there? We have to write it in the expenses account. Okay, to salaries and wages 6,200. Rent and rates 1,200. Sundry expenses they have given 800. Then petty cash expenses. There is 200 closing 100. So that 100 is the petty cash expenses. Okay. 2 petty cash expenses. Then 2 allowances to customers. They have given allowances to their customers rupees 200. That also you have to write it in the debit side. Then discount given to their customers 1,400. 1,400 is the discount. Then 2 bad debts. Bad debts how much? 600 is the bad debts. Okay. Then by branch profit and loss account 10,500. By branch profit and loss account for the Delhi branch profit and loss. Okay. Net profit to profit and loss account how much? 9,400, right? So 9,400 is also you should write. Okay. Then by gross profit. Gross profit already we got it, right? Also, then you have this loss in profit and also 6,000 minus 25,000. Okay, you come to this credit side, sales, cash 7,500, cash sales is 7,500, then credit sales 28,400. I have given, right? 28,400 credit sales, less return 500, less return 500. Total, just to subtract it, 28,400 minus 500, 27,900. You should write it in the inner column. Then you total it and write it in the outer column. 45,400. 45,400. Then by closing stock. Closing stock given in the question, right? 6,500. Just to write the closing stock 6,500. Put the total 51,900. Gross profit CV 19,900. Okay. So besides the total 51,900. Just to brought on the gross profit by gross profit BD 19,900. By gross profit BD 19,900. Then two salaries and wages. Two salaries and wages 6,000. Country expense 800. Cash expense 100. To allow customers 200. Discount 1,400. That is 600. Okay, these are the items are given in the question. Just to see and write the cost. Here, these are the items are there. Salaries and wages, rates, sundry expenses, allowances, then after writing it, just you put the total 19,900, 19,900. Credit side is more than the debit side, so the net profit 9,400. When you subtract these items, you will get 9,400. 9,400 is the net profit of this company. Okay, that is the branch trading and profit and loss. Thank you.